Imagine you're playing a game of poker, but this isn't a normal game. Your opponent isn't just a person, it's a country with centuries of history, a massive vault of gold, and the power to print its own money. Most people would say you're crazy to bet against a central bank. It's like trying to stop a tidal wave with a bucket. Central banks are the gods of the financial world. They decide how much your money is worth. They can raise interest rates, they can buy up their own currency, and they can change the rules of the game whenever they want. But in September 1992, one man didn't just bet against the Bank of England, he broke it. In a single day, he made over $1 billion in profit, while the British government lost billions of taxpayers' money. It was a day that changed the history of Europe forever. This is the story of Black Wednesday. It's a tale of political ego, a flawed European experiment, and a mathematical trap that George Soros saw coming months before anyone else. But to understand how he did it, we have to go back much further than 1992. We have to understand the man himself and the secret philosophy that allowed him to see what the rest of the world was missing. Born in Hungary in 1930, he was just a teenager when the Nazis occupied his country. His father, Tivadar, was a clever lawyer who realized early on that the normal rules of society were about to break. Tivadar saved his family by getting them fake Christian identities. George spent his teenage years pretending to be someone else, watching as the world around him collapsed into chaos. This taught him a lesson that would define his entire life. The official version of reality is often a lie. If everyone believes something is true, but the underlying facts say otherwise, the truth will eventually shatter. After the war, Soros moved to London. He was poor, lonely, and worked menial jobs to pay for his education at the London School of Economics. There, he met a philosopher named Karl Popper, who taught him about open societies and the idea that human beings are fallible, meaning we are always making mistakes about how the world works. Soros took these ideas and created his own philosophy called reflexivity. It sounds complicated, but it's actually quite simple. It means that our beliefs about the market can actually change the market. If everyone thinks a stock is going up, they buy it, which makes it go up. But eventually, the price gets so far away from reality that the whole thing has to come crashing down. By 1990, Soros was already a successful hedge fund manager, but he was looking for the big one. He was looking for a moment where a government was lying to itself so badly that he could bet against that lie and win. And he found it in a small, ambitious club called the ERM. In the late 1880s, Europe had a dream. They wanted to end centuries of war by tying their economies together. They wanted one single currency, the euro. But they couldn't just switch overnight. They needed a training period. They created the ERM, the exchange rate mechanism. Every country in the club agreed to keep their currency's value within a narrow range compared to the others. It was like a group of friends promising to walk at exactly the same speed, no matter what. The leader of the club was the German mark. Germany had the strongest economy and the lowest inflation, so everyone else had to peg their currency to the mark. In 1990, the United Kingdom decided to join. They agreed to keep the pound at a value of at least 2.95 German marks. But there was a massive problem that the politicians ignored. In 1989, the Berlin Wall fell. Germany was reuniting. This was a beautiful moment for history, but a disaster for the ERM. Germany was spending like crazy to fix the East. To stop their own prices from rising, they raised interest rates. This made the German mark incredibly attractive to investors. Everyone wanted to hold marks to get those high interest rates. This was the broken link. The UK needed lower interest rates to help its people, but the ERM rules forced them to keep rates high to match Germany. The British government was trapped. They were promising the world that the pound was worth 2.95 marks, but the reality was that the UK economy was too weak to support that price.
George Soros and his lead trader, Stanley Druckenmiller, were watching this drama unfold. They saw the British Chancellor, Norman Lamont, on TV every day, insisting that the UK would never leave the ERM. Soros didn't just use his own money, he used leverage. He borrowed billions of pounds from banks and immediately sold them for German marks. He was betting that when the UK finally gave up, the pound would crash and he could buy those pounds back for much cheaper to pay off his loans. This is where reflexivity comes in. By selling so much, Soros was creating the reality he predicted. Other investors saw the giant quantum fund selling and thought, if Soros is selling, maybe I should too. The snowball was starting to roll. The Bank of England was in a death spiral. They were using their national reserves, the money meant for schools, hospitals, and roads, to buy pounds from George Soros. Soros was essentially draining the British Treasury into his own pockets, one trade at a time. September 16, 1992, Black Wednesday. The day started with a tidal wave of selling. Before the markets even opened, billions of pounds were being dumped.
By 8:30 a.m., the Bank of England had already spent £1 billion trying to prop up the price. By 9 a.m., they had spent another billion. It wasn't working. The pound was pinned to the bottom of its allowed range. At 11 a.m., the government tried to scare the speculators. They announced they were raising interest rates from 10% to 12%. This is a massive jump. They hoped investors would stop selling and start buying to get that 12% return. Soros knew this was a sign of total desperation. He knew the UK economy couldn't survive 12% rates. He told his team, "They're bleeding. Keep selling." Imagine your mortgage payments suddenly jumping by 50% in a single afternoon. That's what 15% meant for the British people. But the market didn't care. The selling actually increased. The world knew the UK was bluffing. You can't fix a broken leg by running a marathon. And you can't fix a weak currency by destroying your own economy. That evening, a defeated Norman Lamont stood on the steps of the Treasury and announced that the United Kingdom was leaving the ERM. They were letting the pound float. The speed limit was gone. The pound crashed to its real value. George Soros had won. He had successfully broken the Bank of England. His profit for the day? $1.1 billion. To put that in perspective, that's like making $12,000 every single second for 24 hours straight. At first, it felt like a disaster. The UK government had lost an estimated $3.4 billion of taxpayers' money in a single day. The politicians were disgraced. George Soros became the most hated man in Britain. But then, the great irony happened. Because the pound was now cheaper, British cars, clothes, and services became much cheaper for the rest of the world to buy. Exports exploded. And because the government didn't have to match Germany's high rates anymore, they slashed interest rates to help the people. Black Wednesday, the disaster, actually saved the British economy. It forced them to stop lying to themselves. It's also the reason the UK never joined the euro. They saw what happened when you try to force different countries into one speed limit, and they decided to keep their own car. Soros didn't cause the pain. The pain was already there, hidden behind political promises. He simply forced the world to look at the truth. He proved that no matter how much gold you have in your vault, you cannot fight the collective will of the market. So, what is the lesson for us today? We live in an era where central banks are more powerful than ever. They print trillions of dollars, they manipulate interest rates, and they tell us that everything is under control. But history, and George Soros, teaches us that price is a signal. When a government tries to fake the price of money, they are just building a bigger house of cards. Eventually, a sheriff or a predator will come along and point out that the bottom cards are missing. Soros's victory wasn't about being smarter than everyone else. It was about being braver enough to believe the math over the news. He understood that in the long run, reality always wins. Your money is your time. Don't let politicians or experts tell you what it's worth. Look at the facts. Look at the pizza and the pepperonis. And most importantly, never bet against the truth.
Do you think George Soros was a financial pirate who robbed a nation, or a market hero who exposed a broken system? Let us know in the comments. This is a debate that still rages today in the halls of power. And if you want to understand the hidden forces that move your money, make sure to like, subscribe, and hit that bell. Because in the world of finance, the most expensive thing you can own is a lack of knowledge.